Hello, my name is Austin Frazier, and we'd like to welcome you to our fourth quarter 2024 market outlook. Some of you joining us may be our clients and others are not. Whatever the case may be, we hope that you see value in the market viewpoints from our advisors here at Capital Strategies Group. As certified financial planner practitioners, we take an unbiased and fiduciary approach to the way that we help our clients. We're constantly keeping an eye on market movements and staying updated through various resources. We'd love to share our insights with you, but it's important to note that just because we're discussing these topics doesn't necessarily mean that adjustments are warranted in your portfolio. News headlines can sometimes create a sense of urgency to take action, but it's important to recognize that not every situation necessitates immediate action or intervention. The Federal Reserve recently cut interest rates by 0.5% and is expected to lower them by another 0.5% by the end of 2024. With additional cuts likely in 2025. The economy remains in a strong position, with inflation trending downward at a manageable pace and unemployment at healthy levels. As interest rates decline, borrowing becomes easier for both businesses and consumers, which can help stimulate expansion and support continued economic growth. With the elections approaching, you may be wondering if this will impact your investment portfolio. Historically, U.S. stocks have continued to rise under nearly every partisan combination, so we don't expect that election outcomes will be a major driver or detractor of overall market performance. Instead, the market's more likely to be influenced by economic fundamentals like corporate earnings, interest rates, and consumer spending. Making investment decisions based on campaign promises or proposed policies may not be wise, as these promises rarely come to fruition exactly as described. We've also been monitoring conflict in the Middle East. While war of any kind is tragic, it's important to remember that geopolitical events like these, while they may make headlines and cause short-term market volatility, don't significantly alter our long-term outlook. Your long-term investment strategy should be designed to weather short-term fluctuations driven by these events. Other factors, such as Federal Reserve policies, inflation trends, and earnings growth of U.S. companies, play a much larger role in the trends and movements of the market. It's crucial to distinguish the difference between the economy and the stock market. They're not one and the same. Just because a particular event affects the economy doesn't mean it will automatically impact the stock market as well. Earlier this year, growth stocks were leading the way in the market. However, in the most recent quarter, we've started to see a rotation away from growth stocks and toward defensive stocks. Defensive stocks, which are typically less affected by economic fluctuations, can provide stable returns and are usually less impacted by the economic cycle of expansions and recessions. We have been making appropriate adjustments in the portfolios of our clients. Even with the broad market at or near all-time highs, we believe the stock market can continue to rise from here, given the positive fundamentals in both GDP and earnings. Those of you paying attention to Medicare benefits might have noticed a pretty significant change this year to most prescription drug coverages. This change is causing a ripple effect in other areas of Medicare funding and benefits. Most insurance carriers are having to shuffle around benefits, and this is generally resulting in weaker benefits for most Medicare insureds. The reason this is worth mentioning here in our market outlook is because it would be easy to view weakening Medicare benefits as a sign that the Medicare program is in jeopardy, or that taxes need to be increased to fund the future of Medicare. We believe Medicare is generally hitting its targets and don't foresee the need for anything more than slight adjustments to fund Medicare in the future. Part of successful investing is understanding what you can control and letting emotions take a back seat to your financial plan. By maintaining perspective, discipline, and a long-term outlook, you can sustain progress towards your financial goals. We appreciate you taking time to join us for this Q4 market outlook. It's important to remember that our advisors are always watching what's going on in the world and in the markets. You can trust that we have the depth of industry knowledge and experience to help you navigate the financial landscape and help you maximize returns and minimize risk along the way.